All right, week three outlook number one. Let's go ahead and get into it. Starting with the British pound futures 6B1. Let's go out to the daily time frame and see what's going on here. So it looks like we have decided to push downward instead of back up into our area of interest on the 4 hour that we're looking at. So it seems like we're just, going with the price action, doing what it wants to do right now. I don't really see any reason for price to pull back lower other than to just generate a liquidity run. Like, just to, seems like right now it's running, it performed just another liquidity draw here to generate some sort of liquidity to push us higher. That's what it's looking like right now, because based off of how price action was running beginning from this low during the pullback, everything seemed pretty balanced. I could argue that, this area down here was unbalanced, but that's not the point of the daily time frame on how I use it anyway. But just looking at it from the macro perspective, any point that the price decided to run from here, which is illogical based on how I'm analyzing, I would assume that price would, continue running from this initial run here to continue the price action run up into this area of interest, but failed to do so. And it's because it didn't have enough liquidity, or enough juice rather, to get to that. So the market had to form some sort of liquidity and attack that. And I'm assuming that price is going to continue to run higher based off of this draw on liquidity that was created here. So looking at it from the 4 hour perspective, once again, like I said before, I talked about the mitigation of this price gap here and all of this price action being completely balanced. So there was no reason for price to pull back into any of these candles over here. And so the logical assumption, or the logical analysis here, would be that, hey, there are relatively equal lows considering this low here and then this wick here. So if there's any reason for price to pull back because it failed to continue higher into this area of interest, it's going to be to draw liquidity from these relatively equal lows here, which is exactly what it did here. And then we can see the response that it's giving. So if there is going to be any pullback for entries, I could, see, even though this isn't the point of this, I can see price pulling back, into this area of interest, this 4 hour area of interest that is already created, and then continuing higher with the, immediate target for continuation would be to take out this high, this liquidity point, and then ultimate target would be this, based off of my analysis, would be this area of interest here. But that's what I'm seeing in the logic behind why price failed to continue higher just immediately into the area of interest. It just didn't have enough liquidity. So because this is a premium, and there's a lot more sell orders that are, resisting, so to speak, this price action moving higher, the logical thing is to fall back into a liquidity pool, which would be this liquidity point here, relatively equal lows, to generate more liquidity in order to push price higher. So that's what I'm seeing right now for 6B1. All right, like I said, S&P 500 is just on there. Okay, so gold decided to continue the bullish run. So what we're going to do now is essentially scrap. Let me go out to the daily. What we looked at, I identify this as a break of structure. This ended up being the incorrect analysis. This actually was a draw on liquidity. So yeah, it is what it is. I misread the analysis here, but in continuation, in the spirit of continuation, seeing that we are still in a very, very strong bullish run, this makes sense why this is liquidity draw. I saw it as a break of structure, analyzed it as a break of structure. I took a few plays looking for sells here, but those ultimately failed. Those were counter trends, so that's on me for not sticking to the overall bullish trend when looking at this. So if I wanted to be retroactive, or if I wanted to take some notes here, it would be make sure that we get an actual clear break of structure and we do a pullback into at least equilibrium, rather than just looking for a pullback just based off of the wick closures here. And then if I'm looking at it from the 4 hour time frame, I mean, even though we did have a couple candles close below this really is just multiple draws on liquidity, where we just shifted structural point from the 4 hour perspective, and then we ran higher. If I'm looking at it now retroactively, that's essentially what I'm seeing, is like this really was not I mean, looking at the candles, none of the candles had substantial movement below this low. Yes, we had a couple of them close, but immediately after closure, we ran back above this liquidity point here. So that's on me for seeing that. But let's go ahead and get rid of all of this, these annotations, and reanalyze the chart. All right, so I'm going to go back out to the daily. All right, so this is still the structural point, 100%. This is still the structural point. I'm sorry. This is not the structural point. We had a structural point, ran that high, and now we had a new liquidity point, and now we have, a new structural point here. All right, this is my new structural point. So now we're looking for a new liquidity point. Why do I say this is no longer my structural point? It's because this structural point is what took out this liquidity point, and then this is the next liquidity point, and then we had the pullback. This is my structural point that took out this liquidity point. So essentially we have structural point, liquidity point, structural point, and now we're looking for a new liquidity point to be generated. All right, so that's what I'm seeing on gold right now. There's not really much to look at from the macro perspective. If we're looking at it from the 4-hour, then I'm just going to assume continuation plays. So if there's anything, I'm not really going to go look for stuff, but immediately what stands out is, this price gap here. And if anything, I'll just wait for more candles to form in order to form up plays. But as of right now, I really don't want to see price go below this low. If it does, then we have a transition from a bullish run into a bullish range. So any of these lows here as part of this price leg being generated right now, if those are broken, that's cool. But if this low is broken, that's my structural point, and I don't want to see that broken. All right, so moving on to the NASDAQ. Going out to the macro perspective. All right, so this is why I said I was sitting on the sidelines for the NASDAQ. It was really difficult for me to read the price action that was going on here. It was hard for me to find entry criteria. So from the macro perspective, we definitely called out this liquidity draw. We said we went through in the previous outlook of week 2, outlook 2, I believe, why I was sitting on the sidelines. I believe one of those. Last week, we went over the outlook of why I was sitting on the sidelines. Showing that we had a shift of the structural point. We had unwillingness, and then we had a run-up, unwillingness. And so essentially we just, generating unwillingness, and then we had some sort of break of structure here. Now, based off of what we just talked about on gold or on GC1, I'm still unconvinced that this is a break of structure as of now. I need to see a little bit better closure above this candle, or above this high here, in order to establish that this is a break of structure or a break of structure of this unwillingness that's being, generated. So going down to the 4-hour perspective, if I'm looking at it, similar to how gold had those closures, you see how, yes, we closed above, but immediately we drew back. And then similar here, we're closing above, but we're drawing back, and we're closing above, but we're drawing back. So I need to see a little bit more displacement, which is, a little arbitrary to define, but with the intent of seeing volume and understanding how candles close, I think it's safe to say that if we have better closures and we have sustained price action above this liquidity point, then we will get continuation of price action higher, which establishes and confirms that break of structure, or validates that break of structure. So that's what I want to see here on the NASDAQ. So as of right now, if we do pull back, I want to see, continuation of price action higher, or in the immediate, I want to see response from, this wick fill here and continuation higher, not only to solidify or validate this break of structure, but to take out these highs here. And so if we take out these highs or this high here, that's, an internal liquidity point, and that will also convince me that we are looking to press on higher. But as of right now, I'm just seeing, essentially just a massive range of consolidation. That's essentially all I'm seeing. Is like from here, from this high down to this low, all of this price action, if I were to mark it out, which is not really correct because we are in a bullish run, but if I were to mark out this, I wouldn't be surprised if 50% falls around where a lot of this price action is, a lot of the sensitivity to the price action is going, right? So this is essentially, we're just ranging inside of this area. So we have a lot of price action in the premium, a lot of price action, or some price action in the discount, but the price action in the premium, even though it's stronger, looking at how the candles visually are dominating the price action moving lower, they're quickly being rebounded by these green candles, which are my bullish candles, to push price higher. So this is confirmation, or to me, validation or substantiation of continuation of the bullish run, but I don't see any entry opportunities personally to continue higher. If there were any entry opportunities, would have been based off something down here or down here, but I really wasn't looking at the time. So yeah, so that's what I'm seeing on the NASDAQ, is just still sitting on the sidelines, looking for more price action to develop, to give clear opportunities. Don't want to get too caught up in all of this wicking out and consolidation of price action. Ideally, what I would like to see, just for extrapolation, not too far, is either we break this high or we pull back into the discount side of this, pseudo price leg or pseudo range, and pull back to, mitigate some sort of liquidity, maybe this low here, and have a liquidity draw. If not, I want to see continuation of this high, and if it does continue, I'll just sit on the sidelines until it breaks the all-time high. So that's what I'm seeing currently. All right, moving on to YM1, which is the Dow Jones. So we talked about the continuation of the bullish run, similar to the NASDAQ. I was looking for opportunities to enter. So on the daily, everything's, just totally fine. But on the 4-hour, what we looked at was, I wanted to see price pull back, into this 4-hour area of interest. It did not do that. It decided to press higher after, once again, misrepresenting this as a break of structure. I saw it as a break of structure, but it really wasn't. It seems to be, yet again, a draw on liquidity. And once again, it's just going to be, it seems like it's growing to be a pattern here, is I need to see more substantial break of the candle below this and sustained movement. So really what I could define as a break of structure would be at least 1 to 2 candle closures below the immediate liquidity point that needs to be the break of structure point, or the structural point or liquidity point, in order to define that break of structure. If there's like wick closures and immediate response to correct or rebound, then it's basically a draw on liquidity. And so that's what I'm seeing here. And so once again, I guess I was just misanalyzed how the price action, or the action that happened at these liquidity points, were for gold, NASDAQ, and now YM. So it is what it is. It looks like that there was some sort of pullback. Not yet. And okay, no, it wasn't. It didn't pull back into that price gap there, which is fine. But we did, once again, have another draw on liquidity. And this draw on liquidity has led to the price action to push higher. We're ever so closely inching towards that all-time high yet again. I was expecting price to pull back into this area of interest, but it's decided not to. So I'm just going to go ahead and get rid of that. We just called that a draw on liquidity as well. So as of right now, I'm just going to sit on the sidelines and wait for more price action to develop on YM1, expecting price to take out this all-time high tomorrow, if not, during this trading period of today, because the new trading day just started 31 minutes ago. And so after that, we'll see what happens from there and see if there's any opportunities to catch pullbacks or counter trend opportunities. But as of right now, from the macro perspective, we are still in a very, very, very strong bullish trend. There's no signs of slowing down. It seems every single pullback is just a liquidity draw at this point. Even, this right here, that was a draw on liquidity, and so on and so forth. So, yeah, that's the outlook for week 3, number 1. Peace.